Should you invest in stocks or real estate? The answer isn't what most people think. Have you ever looked at someone who owns a rental property and thought, that's the smartest investment anyone could make? Then, a few minutes later, you watch someone else talk about how they became a millionaire just by buying stocks every month. Now you're stuck. One person says real estate is the fastest way to build wealth. Another says stocks outperform everything over the long run. So, who's actually right? If you're like most people, you're probably asking the wrong question. Because the real question isn't whether stocks are better than real estate. The real question is whether one of them is better for you. Today, I want to help you answer that question without the hype, without the endless debates, and without pretending there's only one path to wealth. By the end of this video, you'll understand the strengths and weaknesses of both investments, the mistakes that cost beginners thousands of dollars, and how to decide which one fits your financial life. Let's get into it. For decades, people have treated investing like choosing a sports team. You're either team real estate or team stocks. People defend their favorite investment almost emotionally. Real estate investors will tell you that land never disappears. Stock investors will remind you that companies create the products we use every day. Both groups make good points, but neither investment is automatically better. Think about it this way. Imagine two people. One has $500 every month to invest. The other has $100,000 saved for a down payment. Should they make the same decision? Probably not. The biggest mistake I see is people copying someone else's investment strategy without considering their own situation. Someone making six figures with a stable career has different options than someone still building an emergency fund. Your investment should fit your life, not someone else's YouTube success story.
So let's start with stocks. When you buy stock, you're buying a tiny ownership stake in a business. Instead of owning a building, you own part of companies that create products, sell services, and earn profits. If those companies grow over time, your investment grows too. It's surprisingly simple. Let's say you invest consistently every month into a diversified index fund. You don't have to fix leaking pipes, you don't have to answer midnight phone calls, you don't have to negotiate rent. You simply continue investing while businesses around the world keep working. That's one of the biggest advantages of stocks. They require very little effort after you've built the habit. History has shown that broad stock market indexes have produced strong long-term returns despite recessions, wars, inflation, and countless market crashes. That's important, because many people see a market decline and assume investing has stopped working. But every major downturn in history eventually recovered. Sometimes it took months, sometimes years, but patient investors were generally rewarded. That doesn't mean stocks are risk-free. Far from it. Open your investment account during a bad year, and you might see your portfolio down 20 or even 30%. That can feel uncomfortable, especially if you just started investing. The challenge isn't understanding stocks. The challenge is controlling your emotions. People often buy when everyone is excited, then panic and sell when prices fall. Ironically, they end up doing the opposite of what builds wealth.
Now let's talk about real estate. Real estate feels different because it's something you can physically see. You can walk through it, touch it, improve it, rent it. Many people feel more comfortable owning something tangible than owning shares inside an investment account. And that's understandable. Real estate also offers something stocks don't naturally provide: leverage. Suppose you buy a $400,000 property with an $80,000 down payment. You're controlling a $400,000 asset even though you invested only a fraction of its value. If that property appreciates by 10%, the gain is based on the entire property's value, not just your initial cash. That can significantly accelerate wealth creation. But leverage works both ways. If property prices decline, or your rental sits vacant, or major repairs suddenly appear, those problems are magnified too. Many people forget that owning real estate also means owning responsibility. The roof doesn't care whether it's a good month financially. The water heater doesn't wait until payday. Maintenance isn't optional. Neither are property taxes. Neither is insurance. These costs are easy to ignore when someone is showing their rental income online. What you rarely see are the unexpected expenses behind the scenes. One broken HVAC system can wipe out months of rental profit. That doesn't mean real estate is a bad investment. It simply means it's a business. Businesses require management. Stocks, by comparison, require patience. That's a very different type of work. Now let's compare something people rarely discuss: time. How much time does each investment require? If you buy an index fund, you could literally invest in minutes, then go back to living your life. With real estate, you're researching neighborhoods, finding financing, inspecting properties, working with lenders, negotiating prices, managing tenants, coordinating repairs, keeping records. Even if you hire a property manager, you're still making decisions. Some people enjoy that. Others absolutely hate it. Knowing which type of person you are matters. Another factor is diversification. Imagine buying one rental property. Your entire investment depends on one location, one neighborhood, one market, one set of tenants. Now compare that to buying a total market index fund. Instantly, you're invested in hundreds or even thousands of companies across different industries. If one company struggles, another may thrive. Diversification helps reduce risk. Real estate investors can diversify too, but it usually requires far more money. Liquidity is another important difference. Let's say your car suddenly breaks down and you need money. Selling stock can often take only a couple of days. Selling a house? That could take months, sometimes longer. During slow markets, it may take even more time. That's why having accessible investments can be incredibly valuable.
Now let's address one of the biggest myths. Real estate makes you rich. Sometimes, but not automatically. The same is true for stocks. Neither investment creates wealth by itself. Consistency does. Discipline does. Time does. I've seen people buy rental properties that barely broke even. I've also seen people buy terrible stocks based on internet hype. On the other hand, I've watched ordinary people quietly invest every month for decades and retire with portfolios worth millions. Nothing flashy, just consistency. This is where people often underestimate the power of compounding. Imagine planting a tree. For years, it barely seems to grow. Then one day, it becomes enormous. Investing often works the same way. The first few years feel slow. Then your investment returns begin generating returns of their own. That's when wealth starts accelerating. Many people quit just before reaching that point. Now let's answer the question everyone is really asking. Which investment produces higher returns? The honest answer: it depends. Some periods favor stocks. Some periods favor real estate. Different cities experience different housing markets. Different decades experience different stock returns. No one knows exactly what the next 20 years will look like. That's why trying to predict the winner usually isn't the best strategy. Instead, build a system that succeeds regardless of which investment performs better for a while.
If you're just starting your financial journey, have limited savings, want simplicity, need liquidity, and prefer a hands-off approach, stocks often make an excellent starting point. You can begin with relatively small amounts and steadily increase your investments as your income grows. If you have stable income, a healthy emergency fund, enough savings for a down payment, and you're comfortable managing property or hiring someone who can, real estate can become an excellent addition to your overall wealth strategy. Notice instead addition, not replacement, because here's something wealthy people understand. Eventually, it stops being stocks versus real estate. They own both. Stocks provide diversification and liquidity. Real estate generates cash flow and offers another type of asset. Each serves a different purpose. Think of them as teammates rather than competitors. One protects you in certain situations, the other helps you in different ones. When combined thoughtfully, they can complement each other remarkably well. There's another point that's rarely discussed. Your greatest investment may not be either one. It might be yourself. Learning valuable skills, increasing your income, starting a business, negotiating a higher salary. Those things increase the amount you have available to invest. And investment earning 10% on a larger amount of money will almost always outperform chasing slightly better returns on a smaller amount. Sometimes people become obsessed with choosing the perfect investment while ignoring the biggest factor under their control, their earning power. If you can increase your income and consistently invest the difference, you've already won half the battle. So, should you invest in stocks or real estate? My answer is simple. Choose the investment you'll actually stick with. The best investment isn't the one with the highest theoretical return. It's the one you continue investing in through good markets and bad ones, because consistency beats perfection almost every time. If stocks help you sleep at night and keep investing, that's valuable. If real estate motivates you to build long-term wealth and you're willing to manage the responsibilities, that's valuable too. The goal isn't proving one investment is superior. The goal is creating financial freedom, and there are multiple roads that lead there. Thank you for spending these few minutes with me. If this video helped you think about investing differently, I'd love to hear from you. Which side are you leaning toward right now? Stocks, real estate, or both? Leave your answer in the comments. I read as many as I can, and your perspective might help someone else who's trying to make the same decision. If you enjoy calm, practical conversations about building wealth without the noise, consider subscribing. Every week we explore ideas that help you make smarter financial decisions, one step at a time. Until next time, take care of your money, and your future self will thank you.